I've got a deck for, just to help give you some basic guidance on making personal financial decisions. The course description kind of talks about stuff that we really didn't cover a whole lot, like insurance and, we talked about capital budgeting, but none of this other stuff. So I just want to kind of blow through some of these things as, to try to just give you some basic financial advice. As a certified financial planner, I felt kind of obligated to at least share some things. Maybe you'll find helpful, maybe not. And like I said, you're free to leave if you don't want to sit through this, but maybe you'll find something interesting to you, and I'll be glad to talk to you at any time with any of this stuff. But so there's some items here, and some links, and I'll put this deck in the somewhere in there so you can have these links. But you can look at how much does debt affect your budget and how your credit score matters, right? Your credit score is one of the most important things that you can protect in your personal financial life. The better credit score you have, the best rates you'll get on your credit cards, the best rates you'll get from a mortgage. You'll be paid, and the banks seriously give you the best they have to offer if you have a good credit score, because you're a good risk. Remember, banking is all about risk, and if you're a good risk and have a strong payment history, they'll give you the best rate. Whereas somebody who's not so good would be paying much more, and it's real money, folks. So protect your credit score. Here's the problem: you may have a significant other who's pretty bad with their credit, right? And so you have to do some police work, right? And so just protect it and try to do the best you can to improve your credit score. And there's ways to do that. Budget is super important. If you don't already have a budget, you should probably get one, because it's good to see how your income's coming in. How much should you be saving? Can you save? There's some good templates out there from Nerd Wallet, has a good template you can use. And then having an emergency fund is always important. I think there's been research that, how many of you would be derailed for a while if you had to buy a tire or something for your car? You may already be experiencing that in today's economy. And that's what emergency funds are for, right? So you don't have to use a credit card if you don't have to. It's always good to have somewhat of an emergency fund, and there's different levels as to how much you need. If you're a student and still dependent on others, then you may need less of an emergency fund. But if you're on your own dime doing this, you should consider it. And it's hard to do, but it's definitely something that will save you if you can save up about 3 to 6 months for emergency fund, 6 months worth of income or whatever. And certainly do this before you invest any money, right, in a market account. Okay. There's needs, wants, and then how much you can save. This Nerd Wallet suggests that you have 50% of your budget for what you need, rent, heat, light, that kind of stuff, 30% of what you want, and then try to save 20%. Now that's a strong, order for a lot of folks, but do the best you can. Talk for a second about banking accounts, credit cards and car loans and such. Like I said, I've had a career in banking for the last decade plus, and always fees and overdrafts will kill you. And a lot of banks don't charge much fees anymore, but if you're finding yourself constantly paying overdraft fees and stuff, try to find a remedy for that. It's just throwing away money. It really is. I noticed when I was at the IRS, people that had tax problems usually also had problems with overdrafts and such too. They were just horrible with money. A lot of doctors and lawyers were my customers. And it's just like, find somebody that can handle your money better for you and say they're just wasting money. And then you should also know that banks have their own internal network. So if you're a bad bank customer and you have a lot of overdrafts and you get checks out there, they report things like that to other banks. And so you may have trouble opening an account at another bank, if you just abandon an account owing money. Credit cards, again, really good rates for those with good credit history. They track the payment history, try not to be late. Banks are competitive. They'll try to give you a better rate. So shop around for rates. Car loans, most, especially locally, they do security service, right? And San Antonio does most of the car loans in town. But try to avoid any payday loans or title loans and that kind of stuff. They all report to the credit bureau, which is FCRA, Fair Credit Reporting Act, applies to all that type of stuff. But they report to the credit bureau, so that affects your credit report, et cetera. And then I found in the past, if you're trying to sell a car, usually you'll get more money for it by selling it on Craigslist or something like that than you would at a dealer. But the trade-in's easier with the dealer. You just run up there and they take it, right? But there's also some paperwork. There's a form you can file with the state if you sell a car to stop the new buyer from running up any tickets or tolls and stuff under your name, right? So you need to file that form immediately. I forget the name of it, but just Google it. It's a state form of the state of Texas. If you sell a vehicle privately, make sure you fill out that form so you don't get hit with any fines or tickets or tolls. Buying a home, there's a bid price versus an ask price. Now today's market's a lot different, right? Homes are going for over, the asking price because it's a tight market. But in the good old days, which hopefully we'll get back to soon, because this market's going to cool off a little bit when we're very close to a recession now. I think that maybe not we'll have one. But just because they're asking X amount for the home doesn't mean you have to pay that. You can offer less than that and see if they'll take it, just like anything else, right? A lot of them are ready to dump the house and get out of there. They're desperate. They may take less money. And unfortunately, divorces and things like that, having people get transferred, they've got to sell it quick, or they want to sell it quick. So just try to not take advantage of them, just get best you can. Saving for a home is important. You'll need earnest money to get into a house. You'll need probably 5% at a minimum to get in. Realtors expect to get paid. They'll want 3%. A lot of times you can negotiate that sometimes. Shop around for rates. Sometimes if you're going to build a new house, buyers have incentives to go with a certain mortgage company, and they'll throw in so much stuff. A lot of times it's a little bit of smoke and mirrors, but sometimes it's a pretty good deal. They give you a lot of good packages. Houses have to be inspected before they can be sold. If you're not getting a loan to the bank, though, you don't have to get an appraisal, by the way. And then when you close on a house, just remember you're going to need a certified check, or you're going to have to wire the money. They're not going to take your personal check at a closing. It has to be all official. So just a little nugget there. I'll stop there to see if there's any questions. It's a lot of information, but I think it's good stuff, maybe useful stuff for some of you. Okay, and then insurance, homeowners insurance is required by the mortgage company, and then it's thing you have to have. You'll want to get a replacement cost policy. That way they'll owe you the market rate to replace things. And then if you don't have it, you may consider renter's insurance if you live in an apartment. It's a good thing to have, because the idiot in your building may start a fire and burn down your stuff too. And if you don't have renter's insurance, it's not covered, unfortunately. So consider that. Most of it's pretty inexpensive. Auto, liability only. If you don't have a lien on your vehicle, you're okay with liability only. But collision's good if you hit a deer or somebody hits you in the parking lot and then hit and run. It's good to have that, because that won't be covered under the liability policy. Liability policies only protect you if you cause an accident or something like that. And then full coverage is good if you can afford it. That covers hail, theft, all the other stuff, but it's expensive. Okay? But if you have a lien, if the bank really owns your car, they'll want full coverage, obviously, to protect their interests. Life insurance, term life is the best way to go. If you're married or if you're a parent, consider it that you must have this now to protect your spouse and or kid. I mean, if you don't have it now and you have children or a spouse, you need to consider that something to get something right away. It's fairly inexpensive for term life. Group life is offered a lot of places. If you can get a group life policy, I would go for that. They're inexpensive too. Of course, when you leave, you'll lose the group life, but they may offer it to you at a much higher premium. Students have asked me about, they may have a relative or someone who sells other types of insurance like whole life and all these blended insurance. And sometimes they can be okay investments, usually not. It's better to just buy term life and invest the rest yourself. But certain exceptions do apply. There are some good products out there. And you may be pressured. It's usually a high pressure sales thing for these whole life policies, or universal life and all these other things. Those are all the alternatives to term life. Medical and dental, it's good. There's an open marketplace, Obamacare, some of those are highly recommend you have uniform dental insurance if you can get it. So let's talk about investments. Okay. So again, only invest in the market if you can afford it. You should have these other things like emergency funds sewed up first before you start getting in investments. As you have learned, the market is pretty volatile, especially now. I'm currently losing lots of money on paper in the current market environment. But as long as I don't sell anything or move anything around, I haven't really incurred the loss, right? I'm hoping it's all going to bounce back as I would start needing those funds fairly soon, and not too soon. But so only invest what you can afford to lose, all right? Just consider it kind of gambling, because it is. In Wall Street, there's no sure thing. There's some safer bets than others. And treasuries, as you know, risk-free, right? Risk-free rate, so that's good. In general, index funds are usually pretty good. I think they've returned over the market history 10.5% since 1930 something over the years. It has been the return, so that's a good place to start, because it kind of captures the entire market if you're a beginner there. Nowadays, brokers don't charge commissions. If they do, if you're paying commission to trade, find another broker, right? Because a lot of people gave up on that, plus the internet. Penny stocks, over-the-counter stocks, usually not a good idea. They're priced that way for a reason. I'm a firm believer in dividends. Dividend stocks are good. They produce income, like AT&T pays a good dividend. There's tons of good dividend stocks, and that's real income over the years. So that's just your bonus for owning the stock. As you've worked many questions now, we're showing by using the dividend payments and how to value the stock that way. You can try that trick on a real stock and get your own valuation. But if you can imagine, if you have a big enough portfolio to live off the dividends, you're doing pretty good. I'm not there yet, but I'm doing pretty good with dividend income. I probably need to triple it if I wanted to survive on it. Again, most broker dealers like Edward Jones, and they're some of the best in the industry, right? There's a lot of good broker dealers. They get paid a commission to sell you things, right? Like certain investment products, including annuities. And so always look for a fiduciary to provide advice to you financially. A fiduciary is somebody who's bound by law to put your interests ahead of theirs, right? And so a CFP, which I am, is a fiduciary. And you see commercials too, where they're bragging about being fiduciary, because that's a big deal. I mean, if you have someone who's not a fiduciary, that means their interest comes before yours, and they're going to sell you the best thing that's giving them the biggest commission check, more than likely, and excluding your family and other people. But a fiduciary can't do that. They have to recommend what's best for you, regardless of what they're going to get out of it. And they have other legal duties too. This is more example definition of a fiduciary. When you invest in securities, registered investment advisors and CFPs, you have to swear to act as a fiduciary. If they don't have those titles, that means they're not credentialed to be a fiduciary, right? And here's some difference between fee-only advisors and that type of stuff. And they take some fees, not a lot of fees. There's differences. So be careful if you shop around with people selling stuff. Tax planning, if you're going to run your own business or just doing your own taxes, make sure that you're holding enough money. It's always good if you owe it. Here's one of my favorite things to teach students when I'm done. If you're getting a big refund at the end of the year with your taxes, you're giving an interest-free loan to the Internal Revenue Service. And some people use that as their savings plan, which is fine. You'd be better off saving the money yourself, though, and paying yourself interest. If you owe below $1,000 at the end of the year, they normally don't. I mean, you'll have to pay it. There's normally not a penalty. So there's a sweet spot there. But if you're getting like a $3,000-$4,000 refund nowadays, thanks for the loan, because I took advantage of your loan and end up owing a little money at the end of the year. And if you're paying tax at the end of the year, you're doing pretty good, probably because you're making too much money, or you're not good at all with your taxes. If you need help, always get a good accountant. They're worth the money. And then if you're running a business, you're required to have receipts, right? And so keep your receipts, try to keep them organized, etc. and learn, if you run a business, learn what's deductible, what's not. Look, and owning your own business is really an interesting tax advantage to life. And there's some good books about that, things you can write off as your business, marketing, et cetera, things you can't. It's a blurred line sometimes where personal life and business blur. That's why a lot of people do it. And it's all legit if you know what you're doing and have a good accountant. And then finally, my favorite, which will be active for me on tomorrow afternoon, is retirement, and then estate planning. There's a lot of good planning sites. Fidelity is a good company. They've got a great website that helps you with retirement planning. They've got some tools there that are just awesome that I use. And then if you work somewhere that offers a 401k, please take advantage of at least what they're matching. That's free money on the table that they're giving you. And if they match like 3%, whatever, if you give 3%, then force yourself to give the 3% because now you got 6%, right? And if you're not taking advantage of the matching, you're just leaving money on the table. As far as estate planning, if you want to, or if you can, leave a legacy for your family, grandchildren, kids, whatever, spouse, you want to be known and remembered, you can set one up. There's trust, there's, having a will, have power of attorney, all that built into stuff. There's living wills, et cetera. So it's good to have those kind of things sewed up if you're going to have an estate, or at least enough left over to take care of your family once you're gone. So that's all for the slides. I just wanted to throw that in as kind of a bonus round for you. Hopefully you can learn something from it. I'll post this deck in today's lecture area, and you can use those links in there that are pretty good for reference. Okay.